So this is my first trip to London since I was appointed Treasurer just over 12 months ago. And perhaps no city in the world over the last 500 years has witnessed the highs and lows of global economic change more than this town. So it's encouraging to see an ocean of cranes across the London skyline. It certainly confirms that the city is back open for business following the terribly dark days of the global financial crisis. As some of you will recall, I addressed the Institute of Economic Affairs 2.5 years ago with a speech entitled "The End of the Age of Entitlement." My speech addressed one of the key issues that most governments in the 21st century face. That is, how to ensure that community expectations of government are in line with what communities can actually afford. It remains a self-evident truth. Governments cannot keep borrowing money from future citizens to pay for today's entitlements. Given the devastating impact of an entrenched entitlement culture, which is still so evident in parts of Europe, successful governments now recognise that they must only commit to affordable spending. Of course, this requires difficult and consistent decision-making. It also requires a fair bit of bipartisan support. The Australian government has recently delivered one of the most significant budgets in its history. It was a budget that was focused on meeting the medium-term and long-term challenges for an economy dealing with horizontal and vertical change. The horizontal changes see key sectors of our economy shifting over time. In particular, we are moving from a massive surge in resource investment to a production phase that will not provide the same sort of stimulus for growth. As a result, there is more pressure on the remaining 90% of the economy not involved in resources to lift its growth performance. The vertical economic change is associated with the ageing population that over time will require better health care and better aged care. We also need to provide more opportunities for those Australians who can and want to work longer. So our first budget was very much forward-looking. It made the necessary and unavoidable calls to ensure that Australia did not have to make far more difficult decisions over the next 30 years. Reform, of course, is never easy. When the challenges are obvious, either through recession or high unemployment, the need for change is also more obvious. Australia is now in its 24th consecutive year of economic growth. So we haven't had a recession for 24 years in Australia. Previous reforms have helped to make that happen. Today's decisions will deliver a continuation of the extraordinary story. There is, however, a temptation to sit back and relax. In Australia, we have a term, it's called "she'll be right." Well, "she'll be right" is not going to work. "She'll be right" is not a policy platform. The world keeps changing and governments and society need to respond to these changes. That is the only way to maintain prosperity. It's also the best way to build future prosperity. Ultimately, it is the only way we can ensure that those who follow in our footsteps have a better quality of life. Today's reality is that the world is changing faster. Economies and their enterprises that are slow to adapt will be left behind. And let me illustrate. The Ford Motor Company, which revolutionised manufacturing in the auto industry in the 20th century, currently has a market capitalisation of $53 billion after 110 years of operation. Google is more than 7 times larger than Ford, and it's achieved that in just 15 years. Thomas Edison's General Electric Company, widely regarded as one of the most innovative enterprises in modern history. It's less than half the size of Apple, which was founded in a garage 40 years ago. Of course, there's a conga line of companies that have emerged in the last 20 years that have immensely changed the way we live. All of them started as small businesses, led by small business people with good ideas. All of them have grown at a phenomenal scale in a very short period of time. Some have simply commoditised old products, like Amazon with books, eBay with second-hand sales, and YouTube with the family films, the old Super 8s. Others have created new products like Microsoft, Twitter and Facebook. But all of them are forcing us to think again about what the future looks like. We are altering the way we do things in our daily life to get the best advantage out of this change. For tradesmen, the mobile phone has been a godsend. Clients can contact them at any time, in the middle of a job. For musicians, YouTube is a global stage. For small retailers, eBay and Alibaba is their customer base. Wikipedia has, sadly, left our old World Book or Encyclopedia Britannica gathering dust on the shelf. ESPN has revolutionised sport, and the list goes on and on. In Silicon Valley, they call this disruptive technologies. Every part of the world and everyone in it is affected. So the question for government is, how do we prepare for the future? Will we have the right environment that will foster entrepreneurial spirit and let these new ideas flourish? For people, for companies, and for governments, technological advancement can be challenging, it can be confronting. These disruptive technologies will impact on our economies in a multitude of ways, from the health services we receive, to the food we eat, to the taxes we pay. So not only do governments need to create the right enabling environments and incentives, they must keep pace with this change. And this requires governments to move faster than ever before. Governments need to ensure that they have integrity, resilience, and sufficient flexibility with their regulatory and legislative frameworks. So the objective of the Australian government is to grow the economy and improve prosperity and ensure all Australians are able to share in it. We did this under the Howard government, and with the right policies, we'll do it again. As a result, we must undertake new structural reform. This will lay the foundation for a more promising and secure future. Over the next decade, the traditional macroeconomic levers of monetary and fiscal policy will not deliver enduring growth in Australia or anywhere else. Monetary policy is currently highly accommodative. Interest rates are at historically low levels. The capacity of monetary policy to do more to stimulate growth is very limited. Indeed, this long period of low interest rates has seen many classes of assets rise in value right around the world. Rather than a comparable increase in real activity, it's been asset values that have risen. So the wealthy who hold the majority of the assets have indeed got wealthier as a result of more accommodative monetary policy. In addition, fiscal policy since the beginning of the financial crisis has been stretched to its limits, and you know that right here in Britain. Many advanced economies are running excessively high budget deficits as a result of the enormous amount of debt servicing they're required to undertake. So with fiscal policy constrained and monetary policy very limited in what it can do, the only alternative to facilitate growth is to undertake structural reform in response to global change. Structural reform is the key plank of the Australian government's economic strategy under the leadership of Prime Minister Abbott. As good economic managers, I say to you, we are determined to set in place a program of modern structural reform. And the first area of reform is competition policy. A competitive economy is a strong economy. It is a key driver for increasing productivity, promoting innovation. Existing competition laws define the market boundaries as within the borders of a particular country, in our case Australia. And of course new technologies mean we live and work within a global marketplace. We have real-time competitive tension from the four corners of the earth in markets as diverse as financial services, retail and mining. So rather than trying to regulate competition in increasingly global markets, we should look at ways to empower consumers so that they have better opportunities in the face of global competition. So we've commissioned an independent competition policy review that will help identify ways to build an economy that promotes growth and job creation and provides durable benefits for all consumers. The next area of structural reform will ensure that we have a strong and stable financial system which can continue to evolve and meet the needs of a changing society. To this end, we've commissioned an independent inquiry and thorough examination of Australia's financial system for the 21st century. And I'm very pleased that Sir Michael is on the International Advisory Panel in relation to that initiative. It is hugely important that we have a global perspective, and we've certainly added that with Sir Michael's presence. By understanding the future direction of financial services, our inquiry will facilitate greater efficiency in our system and a more productive use of funds. It will help facilitate economic growth in coming years while delivering financial sector stability. It will ensure that funds flow through the economy to support jobs, help businesses and individuals meet their investment needs, and it will support individuals' ability to fund their own retirement. The work we do here will complement the work we're doing in the G20 through the Financial Stability Board. Last month, I chaired the G20 Finance Ministers and Central Bank Governors meeting in the vibrant coastal town of Cairns in far north Queensland in Australia. We achieved a huge amount of success with our focus on delivering our four key priorities in financial regulation. That is, implementing the Basel III liquidity and capital requirements, addressing the problem of too big to fail banks through financial bail-in requirements, ensuring over-the-counter derivative markets are adequately regulated, and finally recognising the significance, the systemic importance of shadow banking. So how did we get there in Cairns? Well, it was a lot of hard work, but new technology helped us along the way. As you may know, Governor Mark Carney, the head of the Bank of England, is also the chair of the Financial Stability Board. But he had to return quickly to London for the results of the Scottish referendum. So he couldn't actually attend the meetings that followed the next couple of days. He needed to be in the room in order to influence the global outcome. So we brought him back to Cairns. We beamed him into the meeting via satellite video link, and we took advantage of Australia's new national broadband network. Incredibly, believe it or not, it was the first time this had ever been done at a G20 meeting. Of course, most of my colleagues who had travelled from all over the world to come thought it was a novel idea and we should do it for every meeting, but that's not going to happen. At any rate, this all happened in a town right on the Great Barrier Reef in Northern Australia. We were able in real time to sort out some of the most fundamental issues that needed to be addressed for the stability of the global financial system. So this is a great example of a world connected by technology and the desire to advance a common cause for the betterment of our citizens. The third area of structural reform is in the area of taxation. You can't build a competitive and dynamic economy without considering the role that taxes play. To that end, we are setting out our plan for taxation reform in a white paper on the reform of our overall taxation system. This will provide a longer-term approach to tax reform by examining how our tax system should support future economic growth and improve living standards. Put simply, we want taxes that are lower, simpler and fairer. And given the international mobility of capital, you also need an integrated international approach that can be enforced. You need an international tax system that is ready for the future. The G20 and the OECD under our presidency is halfway through delivering a 2-year, 15-point base erosion and profit shifting action plan. And this ensures that international tax rules can keep up with the future. We will also be developing far-reaching initiatives to identify and catch tax cheats. through the automatic exchange of information using what's known as a common reporting standard. These reforms obviously help our nation to build for the future. In the first 14 months of government, we set about restoring fiscal sustainability and with it restoring confidence in public finances. In our first budget in May, we laid out a strategy to bring our budget back to surplus. We detailed a measured approach to reduce the budget deficit within a realistic timeframe. We chose a path that returned the budget to surplus without hurting our prospects for sustainable, broad-based economic growth. We started by reining in wasteful spending. This means making the government both efficient and effective. We abolished a carbon tax that didn't reduce global emissions, but was stifling business activity with higher costs. We abolished a mining tax that didn't raise revenue, but was obviously damaging our international reputation. We ended business uncertainty by dealing with almost 100 announced but unlegislated tax measures which dated back 13 years. So announced 13 years ago, taking effect 13 years ago, but never legislated. And in fact, our advisors told us that they didn't know what the motivation was because they weren't around at the time. We've removed 10,000 redundant pieces of legislation and regulation, cutting over $700 million of red tape for business and community organisation. That's not to say we have indiscriminately cut programs. Yes, governments do have certain obligations, such as providing affordable health care and access to education, as well as, of course, personal and national security. But we look after those most in need and with good policies help those affected in any transition. And ladies and gentlemen, these services must be provided in an affordable and sustainable manner and in a way that encourages citizens to pursue meaningful lives. We are creating an environment where businesses can plan with confidence, where they can take calculated risks, take advantage of emerging opportunities, where future generations can feel secure about their prospects. The inevitable ageing of the population, which is happening right here in Britain, and the rising frequency of disruptive technologies also requires governments to take a longer-term approach to policy and regulation. And that's for this reason we're undertaking what's known as an intergenerational report that looks at our fiscal challenges for the next 40 years and takes into account, importantly, the demographic changes, including immigration intake we expect over that period. So don't ever doubt the key role that finance ministers have with the implementation of that structural reform. Each sector of the economy is linked, and ultimately it's up to finance ministers, in the case of your Chancellor, to take a whole-of-economy perspective. It's a little bit more difficult in some countries. In our case, it's certainly more difficult given we're going through generational economic transformation. In recent times, Australia has benefited from the largest resources boom in modern history. Mining output as a proportion of the Australian economy has doubled over the past decade. But as that declines, the boom declines, I want to make sure we're in the best position to take advantage of the world's next major boom, and that is the rise of Asia. Our resources sector has benefited from the growth in Asia, particularly in China. And as a result of the significant increase in demand for commodities, investment in the resource sector grew dramatically over the past decade. The resource sector will be a more moderate contributor to growth in the next few years, but for our country, many areas of the economy will gain momentum to counter that decline. In particular, residential construction, infrastructure and investment are expected to strengthen. You can add in there education and health services as well. Yet whilst we may have solid growth in the future, the transition we face is enormous. We know from experience that transitions could well be bumpy and that economic indicators may well be more volatile in the short term. Many new industries will be created, some will fade. That's the nature of transition. I mentioned infrastructure investment a little bit earlier. It's another part of the global challenge and it's an important part of our economic transformation in Australia. There is a tendency for some governments to look only to the short term, to the next election, believe it or not. Well, if we're truly to invest in the future, we have to look further ahead. In Australia, in our first year of government, we announced the biggest ever infrastructure program. Over the next 6 years, government investment in infrastructure will catalyse over $125 billion of new additional infrastructure. That's on top of what is already planned by government, and it's on top again of what is happening in the private sector. I'll give you one good example of what's happening in the private sector. In Darwin, there is a new gas plant to supply gas to Japan. Australia is expected to be the biggest exporter of gas in the world within the next 5 to 10 years. This one gas plant, this one gas pipeline and one gas plant has the equivalent in steel of it of 100 Eiffel Towers, end-to-end Eiffel Towers. The Eiffel Tower has 7,000 tonnes of steel. This one gas plant, being built for around $15 billion, has 700,000 tonnes of steel. And it's one of the smaller gas plants being built at the moment on the coast of Australia. So on top of that sort of construction, there is new construction the government's facilitating. And what it means is, this new infrastructure means is that people are going to have better quality roads, better quality rail, and that's what they expect. It adds to the social infrastructure that we all need. But we have to, in Australia, like you do in Britain, need to look beyond your borders. We know that modern economies are interconnected. No country can afford to act in isolation. We're certainly not an island, even though we look like one on a map. So I can say to you, international developments can impact on domestic economies in the blink of an eye. The technology revolution and the integration of markets has transformed the way we do business. Markets and financial systems are more interconnected than ever, and that delivers great benefits. Global forces continue to reshape countries' natural advantages in ways that governments cannot anticipate. And there are many different fundamental forces shaping global economic activity. Countries around the world are turning to Asia, and I'm afraid Europe is spending too much time focusing on just Europe. And too many commentators are spending too much time focusing on Europe, and they're ignoring the massive growth out of Asia. Specifically, they're ignoring the massive growth of the emerging middle classes in China and India. They are going to bring a vast number of new consumers to the global marketplace. On present trends, there could be close to 2 billion Asians in middle-class households within the next 7 years. 2 billion in the middle class of Asia in the next 7 years. Think of the population of the United States, Canada and Europe, and that is a fraction of what you're going to see emerge in Asia over the next 7 years. Industries such as education, agriculture are already benefiting from this growth. For example, education exports from Australia to Asia have doubled in the last 20 years. China's share of our wine exports is now 5 times larger than what it was 5 years ago. And of course, they want quality housing, they want quality food, they want that quality education, and so on. They want what we all have in the Western world, and they want it now, and they can afford to pay for it. It's just we've got to get it to market. A broader range of services will be the key to that rising demand. In areas such as tourism and financial services, of course, there is huge opportunity, just to name a few. And another example is medical research technology that has massive untapped possibilities. There are advances every day in disease prevention, management of chronic illness, and aged care, to name a few examples. The Medical Research Future Fund, which we've established in our first budget, is the largest medical research endowment fund in the world. And we have designed it to help to facilitate the sort of research that is going to make living longer with better quality care possible. But there's undoubtedly going to be huge demand from Asia for health services as one area, and we need to meet the demand from Australia. It is going to be tough to compete, but we've all got to be ready for it. The best way to facilitate some of that competition is, of course, to grow your marketplace. And that's one of the reasons why we've got on with signing new free trade agreements with Korea and Japan, and we hope to have a free trade agreement signed with China by the end of this year. So in conclusion, I'd say to you that the world has spent a lot of time and effort dealing with the after effects of the global financial crisis. And some of those after effects are still obviously having an impact here. It has been one of the most dislocating periods that the world economy has seen since the Great Depression, and that goes without saying. But whilst the global economy has been in intensive care, now is the time for us to speed up the recovery. And just like our citizens do every day, we in government, wherever we're located, need to do the hard work, and we need to act now. Procrastination is the enemy of government, as it is the enemy of business. Sensible, mature, bipartisan debate is our best friend. I believe that with hard work, greater collaboration and more conviction, we can obviously become a more prosperous global economy, one in which there are jobs and opportunities for all of our citizens. That's what we're doing through our leadership at the G20 this year, and that's what we're doing domestically at home. We're working hard to implement an economic strategy that delivers well-paid and secured jobs. We want business to thrive. We want to usher in an opportunity, a greater opportunity for families to share in the prosperity that they deserve. So I'd say to you, it's a tough time to be in government, there's no doubt about that, but there have been tougher times. Now is a period of opportunity. Now is a period of hope, with the fastest growing region in the history of humanity, operating in Asia at the moment. I feel confident about the future for Britain, for Australia, and for the rest of the world. Thank you very much.